Hey guys, what's up? Today I'm going to be talking about, well, I already made a video today, but today I'm going to be breaking down the market more and more and more. And if you guys have been watching my last few videos, you have been seeing a consistency negative feeling in the market. You've been seeing some consolidation, a lot of resistance, just overall bad stuff. So I'm going to break everything down for you and you can make your own decision on it. I'm just going to say it out right now. I think the market's going to go down pretty bad within the next few days. So, if we go to my trading view, let me just get my trading view up. Load analysis. Alright, so we have my analysis. I did a full depth analysis on this so we can make this better. Alright, so this, actually, I'm going to start off with this candle pattern wedge. Now you may be thinking, well, what the heck does this have to do with anything? Well, this could be meaning that a wedge is going on and breaking. It's going to break out, essentially. So there was a candle pattern wedge right here, right here, right here, and now we're seeing one that is a lot larger. So if you can see, so this amount of candles came from here to here, alright? And then that actually fits perfectly within this drop and that gain right there. And it looks really good. And then that drop and gain right there fits perfectly right here. So I basically sized it appropriately, draw a line, candlestick patterns, and then I measured the angles. 44 degrees. They are practically the same amount of degrees, meaning that they mean almost the same thing, or a wedge. So if we actually do the other side now, which I will do, our trend angle, we have a 105. Then if we move that over there, we have another 44 degree. No wait, we have a 117 degree. So I'm just going to show you how it's getting so this could also mean that it's getting smaller and smaller, just showing the wedge of all of this. So we have 107, then we have a 117, so this number is growing. Its declining rate is growing at a time, meaning that it has downward pressure. So that's what I think about that. That's what I think about that. So now we have a candle wedge, and it is a downward candle. It is a downward triangle, which means if we're doing this right, we could just expect this to be smaller and smaller and smaller. And then since it's a downward trend pattern wedge, there's a 75% chance of it breaking down. So right here we're gonna write down. Down. So this is saying down. Right here, and it is also saying oh man, I can't type again, and it's also saying a 78% chance of going down. By the way, if I don't spell anything correctly, please don't. I don't have spell checking on my computer yet. Okay, so this is basically pointing down as a 78% chance of going down. Already that right there is showing that that really freaking sucks. Now you might notice this down here. This is not actually an indicator. It is something that I made myself. So this downtrend, actually no, I'm going to go to Fibonacci first. So if we go like this, if we place it on the top of there, we zoom in a bunch, and I actually should move these, and if we zoom in a lot, we have support resistances for a lot of stuff. So now you can see, alright, so we have up, and then finally it comes to a point where it's a resistance, breaks down, and then once it gets in the purple, it's more a consolidation point. So we have a consolidation point, but it's still kind of downtrending. And now, I think this is where it gets really interesting. I think it's mirroring itself going up and down. So that means that this could possibly be a double top, this could possibly be a double top, or this could be even close enough for a double top. So it doesn't really matter, but as you can see right here, so I mean it kind of is in the scope, but if you look, there's a resistance, it breaks it, and then all of a sudden it's on an upward trend. There's a resistance, and now all of a sudden it's on a downward trend in this circle. So it's just doing the opposite every single time. So in this blue, you have an uptrend. This one, you have a downtrend. The gray, uptrend, downtrend. Light blue, uptrend, downtrend, and then uptrend in the green, and then downtrend into the green, and then an uptrend, and then another downtrend, and then consolidation in the red. So that's what I think. So that is also showing a down. So if we just follow this, what is it doing at that price right there? It's estimated to drop back down to here, and then spike up till there, and then it can do whatever, but that's just what it's predicting. So it can go up here again, make official double top, or it can continue down here and just completely just wipe out everyone's account. So if we're going off of this and thinking that it's like that, we have about a 60% chance of that being right. So 60%. Alright, there we go. Okay, alright, we have a 60% chance of that Fibonacci circle being correct. So I'm just going to erase all that now, and I'm going to take some stuff off the chart. Alright, now, time to get into the very fun stuff. So I'm just going to fix what I did before. Top. Alright. I need to do one more. Need to do one more. I'm sorry about this. I thought I had this all ready to go. So, prediction. You can start at the actual uptrend right there. Alright, so that is where the uptrend actually starts. And as you can see, hold on, let me just get a quick feel at this angle piece. So from the last point that it breaks in, it's 137 degrees, 151. So adding up that together, I think it should be around 170. So somewhere just within there. So what we're going to do is we're going to take that and extend that right there. And what we're going to do with that, and we're going to take it, extend it until it overlaps with that. So we can just be consistent. Alright, because that's what we're trying to do. So now we have all of our angles correct. And as you can see, this kind of goes along with this. Every single time that this forms this V pattern right here, which it has, there is a massive downtrend. Every single time, every single massive downtrend. And I think that's what's happening here, but they're getting smaller and smaller. So if I go like that, if I do the curve correctly, so if we draw some stuff, shoot, I did that wrong. Okay, if we draw from the tips to the tips to the tips, that's where the bottom should be estimated out as. but there is other ways to do this too. So there's 3 ways that you can think about this. Is every single time that you have these angles that break down and you have the same angles, you can see the wedges are pretty much the same. So all of these right here are identified right here with the same pattern, all right? And they're getting smaller and smaller and smaller, and so are the ways that it drops down and how far it drops down. But we're going to get to a point where it breaks, all right? And I have identified that with the Elliott wave. And the Elliott wave is a wave. It is 82% accurate. I know the spelling is bad, but I also noticed something about it. So every single time, I'm just going to tell you about it, every single time that there's a line right here, it means that it was wrong on its prediction. So we have 1, 2, 3 wrongs out of 20. We have 20, 3 wrongs out of 20 rights, all right? And when it starts to uptrend, if it's before the top of the peak of this wave, I mean at the very bottom before it's bottomed out, it tends to be a stronger, stronger trend up. So now, on this first one, look at this. It's after it. It's not very strong, it's not very strong, it's not very strong. It's after it, it's kind of strong, not really strong, not very strong. And then, we have our first uptrend before, and then we have another uptrend before, and look, they're both really massive pushers. And right there we have another uptrend before, and those gains are all big, all right? Then we have the red, shoot, that should be blue. Alright, and then we have the red ones. So if it breaks after the peak for the red downtrends, they tend to be a lot larger. And as you can see right here, so this one peaked after the red, and is now on its way down right here. Boom. So right there, this piece was wrong because it's all stimulus. Boom, massive, massive, massive. So look at this one was building up for a really, really, really long time. So it's identifying where we are in the trend. So currently we are about right here at the tip of it. And this can go either way, but as farther as it gets past this wave, the bigger that it can become, that this candle. And this is actually kind of nice because it's at the very top, meaning that it can't break down that much, but it can break down a lot. So right here, it waited, and then it broke down. It waited, and then it can break down more. So if you look at this piece, after this massive breakdown, we have a basically straight down. After this one, we have a straight down. After this one, what are we going to expect? We're going to get where we want a straight down. But I don't think it's going to start to recover until December 11th at 7:30. And that's possible. And then the latest that it can recover is January 12th at 12:30, 2021. And those are the latest things that we can possibly think right there. And we can't predict the future on this, but as you can see, it's kind of accurate and it's nicer. So I just like this because look, it's after. It's not that strong of a push. And then it's after, it's not that strong of a push. And then, sorry, I have to take a call real quick. Alright, sorry. So, as I was saying, every single time it gets below it, every single time it's before the top of the candle, it is usually, before the top, I'm sorry, I'm like having a brain fart, I just was on a call for a second. So, as you can see, that's not that strong of a push, so now you can see the buys. The pushes are getting smaller, but the losses are getting greater and greater. So look at, we have better pushes, and now we're getting a little worse. Now we're a little worse. Now it's pushing up harder and harder and harder. But then all of a sudden it's before. So now we have our hardest push. We have these two hardest pushes right there, and as close as it can to get to this middle one, that's the strongest. And then the same things with this. But it has to be with this way, going the opposite direction. So I'm just going to kind of try to highlight this real quick. So for the sells, if it's before the top of that candle, then it's not going to be that strong of a downtrend. So like this one right here, strong downtrend because it's past this piece right here. Look at that. Now we're past this piece even more, and then this piece is right here. So what are we expecting for the near future? And that's just today. Now if we look at some patterns just besides that, it also shows that it's going to go down. So I'm just going to trash all of this real quickly, and I'm going to be looking at the 180 SMA and the 200 SMA. Very, very good ways to look at the trend of a stock. You can see that we just crossed below it. And when we get this cross, a yellow cross, it's basically confirming the downtrend. Now you see this looks like all consolidation right here. So if we're using day trading skills, this looks like a ton of consolidation right there. Just looks like a big bunch of it. And you can kind of see it like up here. All of this is consolidation too. That's consolidation. That's consolidation. That's consolidation. That piece is consolidation. So you can see at the very tops of everything there's a lot of consolidation. And since the virus and the government just be taking over everything, they don't want it to go down. Every single investor doesn't want it to go down either, but people are knowing it is inevitable. So they're having a massive fight, and I think that's what this is right here. And I think that is what we're seeing. But as soon as we break out of this consolidation, it's either going to go higher or lower. Because this could easily, I mean, it looks like this is a support. It looks like this is a support, but it just could be a, it could just be a, what's it called? It could just be a ton of consolidation maximized out. So if we go like that, look at that, that kind of looks like it, and that's like consolidation from another period, just massive spikes up and down. And so it's just having a massive fight because it's not following the trend of people. So right there, if we take right there to right there, if we extend that a bunch, we are now looking at a lot of volume going on right here. And if we look at the volume, so let's look at some volume. You can see just around here sorry, I should probably use a different one. I'm sorry, give me a second. There is a ton of volume compared to this. So we are experiencing a multiplication of factors. So every single time you can see a little bit of consolidation. Just look at how different it is at a point in time. So before pandemic, I'm just going to take our tops. So average tops, and then I'm going to take these tops, and I'm saying, look at that, we have about 2 times, almost 2 times the amount of volume as we had before, pre-pandemic. We're literally just anything, and now we have a lot of volume, which means people's actions are multiplied, and considering that this is a triple leverage ETF, it's 6 times multiplied. I don't know what it's called. So this, I'm going to say that it's going to go down. I'm going to say that it's going to go down. I think it's just a massive consolidation period. Okay, we're going to be looking at 120-day SMA, and so we're going to be looking at 4-hour chart in snow. So as you can see, looks pretty darn smooth generally. But as you can see, every single push, when it has a massive push, it tends to be followed with a massive decline. And as you can see, we're having a push, or a massive push on the 4-hour chart, but we haven't had a massive decline, and I think that's where that multiplication of people's actions are coming in into play. And the government doesn't want it to go down. The people are scared, so they're selling, and the government is literally just trying to do everything it possibly can to keep us there. And I think that's what's going on. Let's take a look at the day chart. And so I actually noticed something really weird, and I'm going to show you it. So I'm going to do a Fibonacci. So I'm going to do some Fibonacci stuff, which I know a lot of people don't think is useful, but it can be useful because it can. So let's try to figure out what the heck happened. So you can see it's moving pretty slow everywhere. Then all of a sudden it breaks off, which is around, so January, March, April, May, July, August, September, October, November. So I think on November 4th of 2016, I think that's where it got us I think that's where everything just kind of kept on going. And we can probably make this smaller or larger depending on our size. Alright. Yeah, so found this kind of weird. So this was the election. This was kind of near the election in 2016. And as you can see, it has been just so much growth. So much growth. It's really, really good. But every single time it hits a barrier, it either goes up or down, up or down, up or down, up or down, up or down. So let's take it in consideration. So if we think that this one's going to go up, and we think the next one's going to go down, which it did, and we think the next one's going to go up, and we think the next one's going to go down, which it did, and then we think the next one's going to go up, then that means we think this gray piece is going to go down. So that's just something that I think can happen. All right, and now I'm going to do some support resistances real quick. I know this video is long, but we're breaking everything. But we have some upward pressure, some upward price strength pressure, and I'm going to color those all green really fast. So I like to call this upward strength pressure, and as we can see right here, we're just trying to get most of the lines, the most strong lines right here. So let's just end it right there, and then actually no, let's put it right there. Alright, that's not one yet. You can't connect any of them. Alright, so now we have some upward price strength pressure, and now we're going to do some downward. So that is one. This is one. This, when it crosses that, there's a lot of downward strength. And then if we go and we connect the bottom of that one, and then we connect the bottom of this one to the top. So this is all-time highs. So this was just pressure. And then we have this piece, this piece, this piece. So as you can see, we have the upward strength price pressure, and then we have the downward strength price pressure. I like to think to myself, it can go either way, but the markets start to tell us. The markets start to tell us what direction we are expecting. So look at this, a lot of upward price strength pressure. We have a slight pullback, but keeps going up. Slight pullback, keeps going up. Oh man, we got a pretty big dip there, but we still have upward price pressure. And a lot of it, so we keep going up, and now it's after this massive coronavirus loss, we just are getting more and more and more and more. So we have a lot of pressure going on, and considering that the more volume that we're taking on, and just in general, we could be expecting bad things to happen because there's more downward strength price pressure. So if we look at just literally anything, we can see, I know these ones don't count for anything over here, but I'm just saying for this stuff, look at it starts to indicate its way down. You can see, boom, that's not a loss, that's a downtrend, that's a downtrend, that's a downtrend, and it doesn't really go anywhere except it just creates downward pressure. And then once we finally break that pressure, you can see that stuff happens, like crap stuff. So I'm saying that that's going to go down. So there's a lot of stuff to this. But I'm just going to talk. I know that this has been a kind of long video. I'm sorry. So what have we known? A lot of stuff is happening that can just really freaking suck. So I'm actually going to open my TD Ameritrade and see what their probability statistics look like. And yeah, I'm just going to see what they look like. But I'm also going to talk to you right now about sorry. I'm going to talk to you right now about news. There's a lot of crap going on. There's a ton of volume, which means it's really volatile. There is a lot of price strength. There is a lot of bad news. There's a lot of good news, but the good news is short, and I mean, it's really large good news, but there's not much of it. But there is a ton of bad news. So in the following months, we could be expecting recovery of up until, I think, like January, and that's when the COVID vaccine is suggested to be out. Shoot. So we could be experiencing, since Joe Biden is now the elected president-elect or whatever, and I'm not saying that, but I don't think that Trump's thing is going to approve, and I don't think it's going to go, I don't think that his lawsuit's going to go far. So I think that there's just going to be a ton of people selling off, and considering that his policies are basically going to destroy everything that's going on to recover the economy, besides the stimulus deal, which is estimated like right before Christmas, if they could possibly get it out right before Christmas, but that's only if they take over the House and they take over the Senate too, and that's the only way that can happen. So, you know, just in general, that tends to be that's an issue. So it's actually, I think that the stimulus is going to be after the COVID vaccine. The vaccine, once it gets to everyone, people are going to start being like, oh, finally we can take off our masks or whatever and go outside and do stuff. And now there still is going to be restrictions, but I don't think it's going to be as harsh as normal. So right now I'm going to show you. We have, hold on. Alright, so I'm going to show you right this. So I have all my trades, but it does not matter that piece. I'm going to go to Analyze. Tqqq. This is practically what they are thinking. So I am touching. Let me just probability range 199. Alright, so this is what TradingView, this is what it is basically thinking. It has 96% volatility, which can be good and bad. But there is by November 13th, there's a 12% chance of it being above 148.60. And here's the statistics down here, so you can pause the video and look at them up themselves. So I'm just going to go across the chart. So it looks like there's a probability of it downtrending. So there's a 39% chance. I'm just going to do the highest in each category. 39.47% chance. So let's just call that 40% chance of it being between 121 and 135 by November 20th. I mean by November 13th through the 20th. Then there is a 28% chance of it being below 121 on November 20th to, wow, what the hell is going on here? Yeah, this is kind of whack. November 13th, November 13th. So this is November 13th, November 20th, November 27th. Yeah, so I'm just going to read the... Alright, by November 27th, there's a 34% chance of it being below 121. On December 4th, there's a 38% chance of it being below 121, but there also could be a chance of it being above 148, so that's probably the issue with the stimulus deal. So currently, I think it might be looking like, I said before in my last video, I've been breaking it down a lot. So in this video, so that's December 4th, and then there's a 40% chance, so it just gets exponentially more likely that it's going to go down. So over time, I know you can't just look at my, I think that it's going to do something like this. So the current price is right there. So you can't really see my mouse, but just try to look at it. I think it's going to go down, and then probably go up a little bit, and then it's going to keep on just going, and actually just following this price curve right here. So, you know, that's probable. And then so there's a 44% chance on November 24th, right before Christmas, of it being below 121. There's a 47% chance of it being below 121 on January 15th. Then there is a 54% chance of it being below 121 by March 19th, and so on until we get to January 20th, and there's a 73% chance of it being below 121. But it gets a less accurate as you go farther and farther out. So I think that the curve where it stops is probably around right here. I think that's where we should probably stop. Or right here, just somewhere, just these are most accurate, so you can just look at those. So that's what it is thinking. And then if we were going off of ITM, and then if we go 50%. So if we give it our best chances, let's just go with a 30% volatility. Actually, no, let's give it 40. I'm just seeing what's going on here, making sure everything looks right. 50. Alright, so even if we give it our best odds right here, there is still a likely chance of it being at 188, between 188 and 135. That's the highest likely chance pretty much in every single category, besides you getting more out, but it just has an exponential loss on that stuff. So yep, that's pretty much what is going on here. So I'm actually going to look at some economic data. So I'm going to search up GDP, gross domestic report, not China, range, 1 year. So over the year we are down a ton in GDP in general. Hold on, let me just, alright, so that's one way that it can go. Now I'm going to be looking at back. Alright, so now I'm going to be looking for unemployment, current employment statistics, construction. Let's just go minimum wage. Should be pretty darn flat. Alright, so minimum wage, as you can see, it's growing, so that I don't think that matters that much. Actually, yeah, I don't think that matters that much. Where the hell is it? I know this video is kind of long, I'm sorry about this, but I'm just trying to break everything down. Economic data, bring that back. Alright, so I'm just going to look through some stuff. Federal Reserve, population, tax data, funds, income distribution. Alright, so this is the median household income over the years. So actually, right now, geez, that's only since 2019. I think that it's already all the way down here again because people have been gotten fired, and actually I've heard that it has been going way down. And then actually let's go to dollar. Let's go to US dollar. So port to FX US. Just go home. US. Let's just search up the dollar sign. Alright. Claims, historical, policy uncertainty. So as you can see right here, we have our... Can we go back, please? Please, can we just go back? Alright. Alright, so we have our economics policy uncertainty, and this drives the market by basically scaring it for a little bit. So this is essentially another marker. It's like the VIX on how scared people are, and yeah, so that's what I think. So you can see in 2008 there's a lot of policy uncertainty, and the market went up anyways, but at first it had a downtrend because there was a change in president. And then in 2016 you can see that the market really wasn't that worried. Only on the 6/26 2016 they were scared of Obama something. But as you can see, since President Trump has taken office, it just has not gone up. And then all of a sudden we get to a place in the market where there is just a massive spike. There's just a massive spike. Like so yeah, that is just an indication of how scared people are, and this is how scared people are. Where is it? Emissions. Business cycle, technology, wholesale, manufacturing. Sorry, this is a long video, I keep saying that, but flow of funds, international transactions, cryptocurrencies, commodities, trade indexes, healthcare, monetary. Actually, let's go to reserves. Let's go to reserves and let's see what the amount of bank reserves that we have by week. So I'm just gonna go by billions of dollars. So now we have a lot of money being pumped in the market. As you can see, there's just a freaking ton of money being pumped in the market since 2008. And just so much money being pumped in the market because we did away with the gold standard and just everything sucks. So just massive. And then all of a sudden we're getting to a point where it's getting its highest ever. So So I hope you guys know this, but 2020 we had our stimulus package. This was our first stimulus package. It ended up going down again because this is the amount of money that banks have, and so now it's going back up. Basically, banks are preparing for another downward push or a spiral, a downward trend. That's what I'm trying to say. All right. So, geez, that was a long ass video. So I hope you guys found that very interesting. I know that was a 40-minute video, and I hope that you guys learned some stuff, and I hope that you guys can make the right decision on everything. I wasn't trying to sway you in any direction, but you certainly know my opinion. I'm not saying that you should sell and short all your stocks. I'm saying that there's a high likely chance of there being another breakdown before December, and then there being a stimulus right after that. Basically pushing the market back up artificially and creating another bubble in the process, which this entire thing just could be a massive bubble anyways, because we don't know if we're in a bubble until we are out of it. So this entire thing could just be a massive bubble. This entire market just could be crap, and everything could just be going to hell right now. So see you later.